Question number 3, part B of Inter-CA Direct Tax or Taxation paper of May 2023 attempt. This is the question on salary chapter. Mr. Rohan retired from Messrs QRST Limited, a private sector company, that means a non-government employee, retired on 31st March 2023, that means on the last day of the current previous year, after completing 28 years and 3 months of service. Okay, he received the following sums or gifts on his retirement. Number 1, gratuity of rupees 7,50,000. He was covered under the Payment of Gratuity Act. Now he is a non-government employee, that is private sector company employee, receiving 7,50,000. Something would be exempt under section 10 clause 10 and balance will be taxable. Second is leave salary encashment of 3,25,000 for 210 days of leave salary or leave balance in his account. He was credited with 30 days of leave for each completed year of service. That means it is not exceeding 30 days, which is the condition given under section 1010 AA. Will be preparing a working note and calculating exemption available under 1010 AA, and then we will find out how much will be taxable. Crockery set worth rupees 4,500, that is less than 5,000, received from his employer at the time of farewell party, which was organized by the HR department a day before his retirement. This is not exceeding 5,000 or it is up to 5,000, therefore not taxable. Why it is not taxable? This is gift in kind. Gift in cash is entirely taxable, but gift in kind is taxable only if the value exceeds 5,000. Here it is less than 5,000, therefore nothing will be taxable. If it exceeded 5,000, then there were two different interpretations applicable. One interpretation is that entire amount will be taxable, and the second interpretation is only amount exceeding 5,000 will be taxable. First 5,000 will be exempt. We have to write both the answers in the exam, you know pretty well. So it's a question of Rohan, gratuity, leave salary encashment and gift in kind, three things are done. Further it says he drew a basic salary of rupees 25,000 per month into 12 months. He has retired on 31st March 2023. That means basic salary he must have received for all the 12 months 3 lakh rupees, along with 50% of basic salary as dearness allowance. That means dearness allowance would be 1,50,000, total would be 4,50,000. Dearness allowance is not forming part of retirement benefits. Okay, now as far as gratuity formula is concerned for a non-government employee, if you recollect the formula, there are three, least of the three is exempt. Number 1 is formula 15 days by 26 days into 1 month salary based on latest salary immediately preceding the date of retirement multiplied by number of completed years of service. Second is 20 lakh rupees the statutory limit, and third amount is whatever gratuity is actually received, 7,50,000. Now as far as the salary is concerned, 1 month salary, the word salary here would mean basic plus only DA, all the types of DA, whether forming part of retirement benefits or not forming part of retirement benefits. So here for gratuity, in the formula for 1 month salary, we will take into account this dearness allowance, even though it is not forming part of retirement benefits. But as far as leave salary encashment exemption under 1010 AA is concerned, here for the purpose of salary would mean basic plus DAR, that is dearness allowance only forming part of retirement benefits, plus commission based on turnover achieved by the employee. So here we have to consider basic the salary plus that much dearness allowance which is forming part of retirement benefits. But as far as gratuity is concerned, both the types of dearness allowances are fine. Further, he received basic salary of 25,000 per month, 50% of basic as DA for the period from 1st April 22 to 31st March 23. Further, during the year, the employer provided him with a motor car 1800cc, which was used by him and his family solely for personal purposes. Underline solely for personal purposes. If the car is used solely for personal purposes, it amounts to a perquisite. We'll see what to do. Cost of fuel and repairs were met by Rohan himself. So maintenance charges are borne by Rohan. There are three elements. Something will be taxable on account of car, something will be for maintenance expense, that is fuel, etc., and something for driver if driver is also provided by employer. So as far as car is concerned, we'll have to find out whom does the car belong to. As far as maintenance cost is concerned, it is met by Rohan only, so nothing would be taxable on account of maintenance cost because it is borne by Rohan himself. The car was purchased by employer, that means car belongs to employer. Car was purchased last year 1st April 21 at a cost of 8 lakh rupees. Now value of the car, irrespective of the year in which it is purchased, if the car belongs to employer, then the taxable value, irrespective of the cubic capacity of the car, the taxable value will be 10% of the original cost of the car, 10% of 8 lakh On account of car, 80,000 will be taxable. So car value will be 80,000, maintenance will be 0 because borne by Rohan. Salary of driver, third thing, driver is also provided. Salary of driver amounting to 10,000 per month into 12 to 1,20,000 was met by the employer only. That means on account of salary of driver, 1,20,000 will be taxable. So how much will be taxable in all? On account of car plus driver, 2 lakh rupees will be taxable. That's a perquisite value. Upon retirement, he gave the car back to the employer. Of course, car was not sold to him at a negligible rate, but the car was given to him for using it. He used it along with his family, and then finally he returned it back upon retirement. So that is not a big deal. That's it. Question comes to an end. You are required to compute the taxable salary. Tax is not required, only salary is to be computed of Mr. Rohan for AY 23-24, assuming that he neither claims any relief under section 89 nor does he opt to pay tax under 115 BAC. Now if he opted for 115 BAC, then standard deduction would not be allowed, and all this exemption under section 1010 for gratuity and 1010 AA for leave salary encashment would not be allowed. So if you can understand in this question, we have 3 items: gratuity, leave salary, crockery set, gift in kind. Then here we have 2 items: basic salary and dearness allowance. And then we have motor car valuation. So 6 items are there. Quickly let's calculate it out. Let's finish with the working note computation for gratuity, working note for leave salary encashment, and working note for motor car. As far as crockery is concerned, we just have to write a note for this. We don't have to write anything further. In the amount column, the taxable value would be nil. Reason you will have to mention somewhere, either in the particulars column or in the working note. Okay. Now basic salary and dearness allowance is not going to consume much of time. So let's come to the computation part. Salary computation. The first point, basic salary 25,000 per month will be 3 lakh. Dearness allowance is 50% of basic salary, 1,50,000. Gratuity received is 7,50,000. Out of 7,50,000, how much will be exempt? So exemption under section 1010 as per working note number 1. Let's check it out. Now as far as gratuity computation is concerned, working note number 1, exemption under 1010. But before that, I'll show you the formula. Rohan is covered by the Payment of Gratuity Act, if you recollect. Therefore, exemption will be this way for him. For those employees who are covered by Payment of Gratuity Act, private employee or non-government employee, least of the following 3 will be exempt: either 20 lakh rupees or the amount of gratuity actually received, or the formula point 1, 15 days by 26 days into last drawn salary. And here the word salary would meaning of salary is given only B plus DA, basic plus dearness allowance, whether DA is forming part of retirement benefits or not, multiplied by completed years of service or a part thereof in excess of 6 months. Rohan has worked for 28 years and 3 months, so 3 months will have to be ignored and will be considered as 28 years only. Based on this note, let's calculate how much will be exempt. So least of the following 3: 15 days by 26 days into last drawn basic salary plus dearness allowance, which is half of basic, 12,500. So 15 days by 26 days into 25,000 plus 12,500, 37,500 into number of completed years, only 28 years, is equal to 6,05,769. So let's calculate it out. 25,000 plus 12,500, 37,500 into 15 divided by 26 multiplied by 28 years. 6,05,769.23 will ignore 6,05,769. Or 20 lakhs or 7,50,000, 605,769 is the least of the 3. Therefore, this much will be exempt. 605,769, and accordingly the taxable gratuity will be 1,44,231. Let's calculate out that also. This less 7,50,000, 144,230.769, that is 144,731. Then leave salary encashment, how much he has received? 3,25,000. Out of that, how much will be exempt as per 1010 AA, working note number 2. So 1010 AA, first I'll show you the formula. So leave salary encashment in case of non-government employees, least of the following 3 will be exempt: either the total salary of last 10 months, and here salary would mean basic salary plus dearness allowance, only if DA forms part of retirement benefits. Unlike gratuity, here we have to consider only that much DA which is forming part of retirement benefits, plus commission based on turnover achieved by employee. Now here turnover is not given, commission also is not given, so that will be 0. And here don't forget that we have to take into account for last 10 months, we have to take into account only 25,000. 25,000 plus dearness allowance forming part of retirement benefits will be 0, commission is also 0, 25,000. Or cash equivalent of leave salary. Cash equivalent of the leave, that would mean the balance period of leave standing to the credit of employee, which is 210 days. 210 days subject to a condition that maximum 30 days of leave or 1 month's leave is allowed for each completed year of service. Okay, and it is given in a question that he was allowed exactly 30 days for each completed year of service. Excess leave, if any, allowed to the employee shall be ignored, but there is no excess leave allowed, therefore 210 days. 210 days can be understood as same as 7 months. 7 months. So 7 months into what? 7 months into 1 month salary. Here also salary would mean the same 25,000, that is basic plus DA, DA forming part of retirement benefits plus commission based on turnover, which is 25,000 as we just calculated it out here, but it shall be based on average salary of last 10 months. Now that is the reason we first finished calculating point number 2. The 10 month salary would mean 25,000 per month into 10 months will be 2,50,000. Now here we'll say 2,50,000 divided by 10 months. The average salary of last 10 months will be 25,000. So 7 months into, or 210 days, which we are converting into months for the sake of simplicity. 7 months into 25,000, which would be 1,75,000. 1,70,000, or the amount of leaves actually received leave salary. Amount received actually is 3,25,000, and the last one is the maximum amount notified by government, which is 3 lakh rupees. Okay, so 1.75, 2,50,000, 3,25,000 or 3 lakh, whichever is least. 1,75,000 will be the least. So in our formula we have calculated it out this way: 1 month salary based on average salary of last 10 months. So rather than finding point number A first, we should first jump to point number B, total salary of last 10 months, because the same total salary we'll have to divide by 10 months to find out average salary of last 10 months. So 25 plus 0 into 10 months, 2,50,000. 2,50,000 divided by 10, 25,000. 25,000 into balance leave standing to the credit of employee, 7 months, 1,75,000, or amount actually received 3,25,000, or the maximum amount notified by government 3 lakh. Now least of the 4 is naturally 1,75,000, therefore 175 will be exempt, balance will be taxable. How much is the balance taxable? So answer is 3,25,000 is actually received, 175,000 is exempt, 1,50,000 will be taxable. Then gift of crockery set, gift in kind not taxable if the value is up to 5,000, nil. Then taxable value of motor car. Motor car is used for personal use of Rohan and his family along with driver. So taxable value of car will be how much, and taxable value of driver will be simply salary paid by employer to the driver or met by employer, which is 1,20,000, and for car 10% of the original cost of the car, that is 80,000. 2 lakh will be the total value. We have already calculated it out. You can take the total will be 944,231. So 3 lakhs plus 1,50,000 plus 144,231 plus again 1,50,000 plus 2 lakhs on account of car, 944,231 minus standard deduction 50,000. There is no professional tax, so 894,231. 894,231 is our net taxable salaries answer after claiming standard deduction. Tax liability is not asked to us, only taxable salary is asked. With that, this answer comes to an end. Our answer is 894,231.